FTMO is back in the US, but why now? And why so many changes? FTMO is an OG, been around since 2015. The way that we know them really since like 2019, millions of customers, payouts, super profitable company. I think I saw in 2023 over 80 million in profit. So, and in 2023, they also decided to cut ties with the US. Now, this happened when my forex funds, they got the plug pulled. CFTC regulation said, you know what, something fishy is going on here. And so the FTMO decided to leave. Good call, in my opinion. That's how you stay in business, right? You don't really want to play with these companies. But after 2 years, they're back. And I don't think they're back to roll the dice. I think they're back to set the tone. So what does this mean for traders, and what does this mean for the prop firm space, at least on the CFD side? So let's check out the email and just the data, the info that we have here. So you either got this in an email version or you can see this in the FAQs. Basically, they split into two companies in the way that they run the challenges and the payout process. So if you can see, their U.S. business model is focused on education, skill building, and risk management. So the JV Prop Corporation is responsible for the evaluation process, which is the challenge and the verification. This is for educational purposes. That's how they're structuring it. That's like how they're laying it out. And then the signal provider program, so the FTMO rewards account, the payout process, the actual trading is under Owanda's Prop US Corporation. So FTMO and Owanda partnered to run the prop side of things here in the US. Now, FTMO made a lot of news, I think it was earlier this year, when they're looking to acquire Owanda, which is a huge acquisition. They're still in the middle of it, but it seems like it's going well since now they're partnered on the prop firm side of stuff. But what does this mean? Like, why does this even matter? This, in my opinion, shows that they're 100% focused on compliance in the U.S. And you can tell just by the way that they're changing, instead of being funded accounts, the reward accounts. And the cool thing, too, is something that's interesting here is that this is offered to U.S. clients and companies. So you can actually get an account as a business, but that's not what this is about. And one thing you'll notice, if you check this out over here, everything is very intentional. Grow and monetize your demo trading. So there's no longer funded. It's not, the marketing is way less aggressive here. Improve your trading skills on our simulated platform and earn rewards. So there's no more funded. There's no more, it's just so different in the way they're going about this. So what does this mean for you? And even if you're looking at the challenges, you can see like the way they're structuring and phrasing everything, average reward, all of this is so different than what we're used to seeing. So what do we do with this information? What does this mean for you as a trader? And then what does this mean for the prop firm space? As a trader, I mean, really nothing. In terms of like the actual trading process, it's pretty much the same thing. You can still trade virtually everything. I think the margin on FTMO in the US is not as aggressive, which is fine. It probably helps more people because it's harder for you to blow your account. Longevity-wise, though, having FTMO in the US is a huge green flag. In my opinion, like, it's the one I've always had the most trust for. So you can kind of confidently, buy your account, scale, go through the process, like just go through the journey of being an FTMO trader, scaling, compounding, and then, if you know about FTMO, they have certain like tiers you can get into, prime, et cetera, et cetera. So long-term wise, pretty high conviction. But what really matters is what does this mean for the prop space? And I think this is going to put a lot of pressure on everybody else. Now, the Fivers also came back to the US, and I can definitely see some similarities. But there's a couple of big things. One, FTMO is partnered with Owanda. So is that going to set the tone on how other prop firms in the US are going to have to be structured? working with regulated brokers on the CFD side for everything to stay compliant. So I could see other companies partnering with Awanda or forex.com to make it work. So probably good business for the broker itself. That comes with costs. So I can definitely see a lot of prop firms not wanting to make changes, not wanting to structure their compliance. And I think this is really the big warning for everybody, is where I think we're going to see a lot of CFD companies based out of the US or that run a lot of business in the US throw some pretty crazy promotions, because FTMO being in the US, it's going to take their business, a lot of it. Now, yes, there are different price points. FTMO is more of a premium, like you're definitely paying more, but that's what you pay for. You pay because you have way more trust in it. So just like we saw in the past in 2023, when there was just outside variables that shook up the industry, I think the same thing's going to happen. We're going to see a lot of companies go out of business, and not just because of running promotions that are going to tighten too much the margins, but on top of that, I think we're going to see on the regulation side of things, we're going to see like CFTC use FTMO as the standard. Like, hey, here's this company, significantly bigger, way more clients, and this is the compliant way to do things. And here's all these other companies that refuse to make those changes. So they're going to be coming down on a whole bunch of companies. So right now, as a trader, I don't think the move is to go for the cheapest account. Stick with something that is going to set the tone. And this isn't just for me I'm not here to really shill FTMO. I have a lot of confidence in them, and just like any business, of course, things can always go wrong. So you do have to be aware of that when you're looking to, build a business around your trading and you're going to leverage prop firms. Always understand that can be the case. However, for me, this is such a green flag, because especially when they waited 2 years, they didn't come back just to, kind of gamble on it. It seems like there was a lot that came into this so that they can come and really set the foundation. So as a trader, I do think this is a great place for someone to start, really. Not to start your trading journey, but if you're ready for it, then yeah, this is definitely the place. And I think we're going to see this really change the landscape overall going forward. So if you're a futures trader as well, I don't think this really influences too much. I don't think it's going to take a whole bunch of business away. People do both. People do one or the other. So I don't think it makes a big difference. But yeah, I'm hyped. I know, I'm about to get some accounts on here and run up the entire FTMO journey. So I have a couple ideas that I want to do here on the channel that'll involve you guys and the journey of scaling up FTMO and taking it as high as we can get it. But with that being said, FTMO is back in the US, and it seems like this is going to set the golden standard for what we're looking for in the future. So let me know, what do you guys think? Is this good? Bad news for traders, for the prop firm space? Does this give us more legitimacy, something to grow and expand upon? Let me know in the comments. And if you enjoyed the video, like, subscribe, and do all the other YouTube stuff. Anyways, I'll see you guys soon. Take care.